think, act, and prosper. You are now tuned into the Money Level Show.
Hello, everyone. Welcome back to the Money Level Show, where we think, act, and prosper. We're at the Rural Symposium, and today we have John Mark Staude here.
Perfect.
I said it right?
You did. You're on it.
That's good. That's good. Thank you. And so we have him here. He is with Riverside Resources. Is that correct? And he has a lot of knowledge, a lot of background in the royalty space. So we're going to talk about royalties. We're going to talk about Riverside Resources and what does that look like? Where are the opportunities in royalty companies in terms of precious metals, gold, silver? You all know what we're into. So we're going to go ahead and get into this. So John Mark, what's a little bit of your background and how you got into this space?
Well, I've really focused on learning about geology in an undergraduate in college in California. And then I went and did a master's degree at Harvard University in economic geology and then did a PhD. And doing that, I really studied mineral economics and then worked in major companies. And I found when I worked in major companies, they own the royalties. And I thought it'd be great if we owned the royalties. So I met great people and I met Rick Rule and founded Riverside 16 years ago. And we're still going strong today.
Nice. So I actually go to Harvard Business School. I'm doing some coursework through them, and so it's pretty cool just how much knowledge you're able to get from those programs. And so and you probably went a while, like I don't know how old you are, but you may have went before me. But I think Harvard Business School was pretty cool. So how was your experience there?
So it's good, and like you say, behind it, knowledge is golden. So we're all about knowledge. So I was there actually in the science department, and so I was doing the economics of geology and really looking at what would make things economic as projects. And that really makes Riverside. So we're trying to figure out what projects economically are viable and economically how to spend our money to really get a great return for investors, for the project, and for all the stakeholders. So yeah, definitely Harvard was a good place to learn, but was not practical. We have to be practical. And so going and working in the United States, Canada, Mexico, practical, and how does rubber meet the road? And it's great you're coming here to this conference. It's a great conference.
Yes, indeed. And so Riverside is royalty, and if I'm understanding this correct, royalty companies sell projects to explorers, correct? And could you explain a little more of that process?
You did that really well, in fact. So yeah, we generate projects, we go out in the field, stake them, work them up, and then we make joint venture agreements with companies that'll develop them. We've actually worked with the world's largest mining companies like BHP, like Teck Resources. So we work with the major companies as well as smaller junior companies. And what we do is exactly right. So we get a project, we work it up, and then we sell it or option it to someone else and always retain generally a 2% net smelter royalty. Having 2% isn't too much, but it's a really good amount. So it's really workable as a royalty structure.
So I imagine 2% is, especially if the mine is producing a lot of metal, that can be a very profitable.
It's a real win, and it's not too much, so it doesn't kill a project. The real thing is you have to do something that's win-win. And a 2% royalty, a 2% NSR is great for us and really works well. So that's net of all the other costs that they have. So it's really good, it carries forward. Make sure it's a really good structure. It's pretty standard in the industry, and we've been doing it that way.
That's good. So how would you say that you assess risk in this space? So I'm sure that when you're connecting with different companies or projects, there's some level of risk. So how do you assess risk in this space?
I do. And so assessing risk is so important. And first is how much capital are you actually putting into something? People look at risk, and so risk is how much money are you going to lose? So Riverside, by having partners funding the work, is a relatively low risk. So although the project may not become a mine, we're not necessarily having to get a mine. If we simply make a discovery, if we simply begin to get a resource, if we simply be able to get something that could get to an economical assessment, just even if it's a negative in this, it's going to increase incredible amounts in value. So it's not the risk and probability of a mine, it's to just get to the next stage. So that's how I assess it, is how much capital do I need to get to the next decision point? And if that's an expected profitable, we do it. And if it's not, we back off and try to find another way to de-risk that project.
Mm-hmm. That's good. That's good. And how much of the general public would you say, I mean, obviously we may not have hardcore numbers, but how much would you say the people you interact with know about royalty companies?
No, you know, it's interesting. First off is we're in the mineral exploration space, and that's already a smaller population than in general. But when you're in this space, you realize that you can either produce it or own it. We'd like to own it. So that's what's really awesome. We own the project. So not too many people appreciate that if you own a project, it's got value. Many people want us to see the miner. The miner actually has to spend all the money, take the risk, put a lot of capital up there to do it. It may or may not work. The royalty owner, if it doesn't work, we're not out anything. So there's very low risk. So it's a great business model. So Riverside's model of generating these projects, not by paying, because if you pay, then you'd have risk. So we find that the general public thinks that we should all be mining and want to see how quickly are we mining, and they value that. And they could value the likelihood of success and the value with the limited downside. That's why Riverside would be a great investment for them.
That's great. That's great. And so you have some products here. I'm interested in what's here right on the table.
You betcha. So one of the things we have actually, this rock here, this pink in quartz here, this is actually from a rare earth element project. Critical metals, the world needs them. And right now, Asia, China has a lot of them, but the rest of the world doesn't. Riverside is going and grabbing them. We're using our database. Knowledge. Knowledge is golden. Knowledge is rare. Rare earth elements. So we're using that. So this rock here is one of those from one of our projects. Another rock here is from our gold project. The green is actually the right type of material with the quartz from a structure, and it's going along. So that's a couple of the rocks. And so this is from our Ontario. So in Ontario, Canada, we have projects. So there's gold in this rock. So one of the rocks has gold. One of the rocks has rare earth elements. And this third thing we have is a coin. That's real money. That's a coin. That's a silver dollar here. And having these silver dollars is fun, and they're very nice to have. And the fact is they're rare. It's hard to get them. It's more expensive. People look at the price of an ounce of silver, and this costs more. It's an ounce, but it costs much more than an ounce of silver. And that's really important for your guys to realize. Why is it that physical metal is so much more expensive than what is priced? Because the physicalness is rare. We make it up through different types of processes, but that's why we have it here, is just to kind of share that.
And so what is your assessment of, like, there's a lot of fear, with the banking crisis and such, and so precious metals demand have been up. So what have you been seeing in just like with the people you've communicated with, or investors or whatnot? What have you been seeing?
So the thing that I've really seen is that with the banking crisis and with these concerns, if you own things without debt, you don't have a crisis. So Riverside has no debt. Riverside has cash. We're in a good cash position. We own our projects, and we're in stable jurisdictions, and we're in multiple places. So what I've seen in crisis is fear. Crisis is that you're not prepared. So if you can find a way to not have debt, if you can find a way that you actually are cashed up, or if you know you own the assets, then you don't have that fear. So it's really important. So for Riverside, what we definitely see is that in this financial crisis and things happening, Riverside is a way to have a safe haven.
That's good. That's good. Well, thank you, John Mark. I appreciate you for coming on and sharing this wealth of knowledge. Where can people learn more about Riverside?
Please come to the website. That's rivres.com, rivres.com. Also, you can give a call at our 800 number. Come and Google us. We'd love to have you come and give us a call and talk to anyone that wishes to. And particularly yourself, Daryl, and any of your subscribers. Love any topics. We'd welcome to it. Also, I have a YouTube channel, John Mark's Geo Tutorial. We really try to do outreach.
That's good. That's good. So I'll be sure to leave the link in the description below. Be sure to go check out rivres.com. Thank you, John Mark, for coming on, and we appreciate your time.
It's great to be with you, and you're doing a great job.
Thank you.